Hi everybody, welcome back to the channel. I just want to run through my top 3 performing stocks since I started investing at the beginning of August. So some well-known names in here. First up is McDonald's. Nobody will not have heard of McDonald's. So I've invested just under $208, and that $208 is now worth $221. I've one share in the company, so I've returned so far $13.50 for a 6.5% gain. McDonald's is a dividend payer, so I received a dividend of about $125-ish before tax on the 15th of September. I discussed that in the dividend roundup that I just posted yesterday. I'll put a link up above, and I just want to have a little look at the analysis that I've taken from marketbeat.com. So McDonald's has a beat the market rank of 2.46, which I've converted to a percentage to 2.46 out of 5, so 49%. I'm going to discuss this more in upcoming videos, what my thinking is behind looking at this, but for now 49% is a strong rank, just under 50%, so I'm comfortable with the overall rank. A beta of 0.67, which means McDonald's is less volatile in the market, which is good because I think we can all see that the tide is starting to turn. I think we're going to have a very rocky couple of weeks, if not months, in the US stock market. I think we all need to sort of hunker down, batten down the hatches, get our portfolios as tight as possible. But McDonald's is a stock that I want to have in the portfolio. Yes, the dividend yield is a little bit low for my liking. I'd like that above 3, but we'll take it. The balance sheet is strong. The main concern with McDonald's is the PE ratio, which is too high. I think this current price, latest price of 220 is a little high, and I don't expect much growth. If anything, I'm expecting that price to contract, but given this stock is a long-term hold, I'm not going to worry too much about that. And as we've seen, it's the highest performing stock in the portfolio in terms of dollar value return, so I'm not going to worry about that. Margins are strong. I think, yes, McDonald's continues to be affected by COVID-19, but overall I think it's strong enough to fight through those headwinds, so my action is to hold this stock. Second is in the list is a stock that I really love, Xerox. I've invested $50 and it's currently worth 58.79, which is a return of 8.79, just over 17.5%. This stock has been up above 20% over the last few weeks, but last week was obviously a topsy-turvy week in the markets, and it's just come down slightly. But I am bullish long-term on this stock. As I say, the stock's just come down slightly this week. I am due a dividend at the end of October. For those interested in the stock, the ex-dividend date is the 29th of September, so you may want to have a look at this stock. Xerox has always been an innovative company. If it wasn't for Xerox, you could argue Steve Jobs may not have been inspired to do what he did. I also understand that Xerox is potentially going to be a big player in the 3D printing space. So I do think this is a long-term stock that I want to hold in the portfolio. A very strong rank, beat the market rank 2.78, which converts to 56%. Great dividend yield, very strong balance sheet, looks to be undervalued, which is good. So there may be more upside on price. I do expect it to be battered around. Xerox has been heavily impacted by COVID-19 in terms of office spaces being shut down for lockdowns, globally as office spaces begin to reopen. I expect this stock to really recover. Margins are pretty good, so overall that's definitely a hold. Finally, we have Crowdstrike, which is a computer and technology company. Just going to have a quick look actually, just to get a bit more detail on exactly what Crowdstrike does, because it has performed better than the rest of the tech space this week. So CrowdStrike provides cloud-delivered endpoint protection, leveraging artificial intelligence. The CrowdStrike Falcon platform protects customers against cyber attacks on endpoints on or off the network. So I think this is a company for the future, involved in artificial intelligence, involved in preventing cyber attacks, something that we're seeing more and more as an issue. As I said, this stock has outperformed the market when we look at the likes of Apple, Amazon, Facebook. This stock has managed to increase 4% last week in a very tough market. Overall, I've only invested $50. It's now worth $58.5, so 17% return. That all said, it's not a dividend pair. That all said, the beat the market rank is very low. Now we need to take that with a little bit of a pinch of salt, because it's not a dividend pair. That really reflects, really, I should do a manual calculation of 136 divided by 4, so we take the dividend out of the equation. It's still a little weak, and it's a volatile stock, a very strong balance sheet, but I'm really concerned about the price earnings ratio and the margins, the net margins for the company. So I am considering whether to sell the stock. That said, it has gone into the portfolio as a growth stock for the long term. One of the issues when you're constantly looking at your stocks and your portfolio is you get a little bit what I would call a trigger finger, and sometimes it's good just to take a step back, remember why you've put the stock in the portfolio. I haven't really put it in the portfolio for a short term, $8.50 gain. I've put it in there because I see this as a growth company. Maybe it could, in terms of the market capitalization, it's a $28.8 billion company. Who knows where this company's going? Who knows what might happen in terms of mergers, acquisitions, that sort of thing. I would prefer to keep this in the portfolio, and if we just look at analyst opinions, well, there's a bit of downside. As I say, this is one that I'm looking at closely. I want to watch it closely and try and make a decision, because as you'll see in the weekly portfolio roundup that I'm going to try and post tomorrow, I feel like the portfolio's gotten a little bit big. I need to rationalize a little bit, so I'm looking for key stocks that I can get out of the portfolio to free up some cash. So that's it. That's a roundup of my top 3 stocks so far. I hope you've enjoyed the video, found it useful, interesting. Please like and subscribe and stick around for more, and have a great weekend.